Domestic demand may dampen as GCC central banks raise interest rates once again in line with the U.S. Federal Reserve. And the U.S. dollar hits a fresh two-decade high today. You're watching The Daily Brief with Forbes. I'm Ramia Faraj. The sharp pace of interest rate hikes in the GCC may dampen domestic demand as they build into borrowing rates. That's according to some analysts after GCC banks raised interest rates once again in line with the U.S. Federal Reserve. Saudi, the UAE, Qatar and Bahrain lifted their benchmark rates by a matching 75 basis points. And the UAE and Qatar say their matching rate hikes will take effect today. In the GCC, analysts say so far non-oil activity has remained resilient, with the improving economic backdrop supporting private confidence and credit demand. But some expect the sharp pace of interest rate hikes to dampen domestic demand as the cost of borrowing rises. The U.S. dollar pushed to a fresh two-decade high this morning, propelled by the Fed's hawkish outlook for interest rates and after President Putin ordered Russia's first mobilization since World War II. The dollar index, which measures the currency against a basket of 6 counterparts, including the euro, sterling and yen, rose as high as 111.79 for the first time since mid-2002. The Fed issued new projections showing interest rates peaking at 4.6% next year, with no cuts until 2024. Asian markets are tumbling today on the back of the rate hike, and they're extending Wall Street's painful sell-off last night after the Fed announcement. The Dow and the S&P both closed 1.7% lower, and the Nasdaq closed 1.8% lower. Markets were expecting another big interest rate increase, but they were caught off guard by the Fed's comments on the need for additional rate hikes. And that brings us to today's Forbes Real-Time Billionaires ranking, where we can see the impact that drop in the markets is having on the world's wealthiest people. Our biggest loser today is Adani Industries. Gautam Adani down $5.5 billion with net wealth of $152.8 billion. Our second biggest loser today is Elon Musk, who lost $5.4 billion overnight and now has net wealth of $271.4 billion. And our third place loser is Jeff Bezos. He lost $3.6 billion overnight and now has net wealth of $142 billion. Check out our website and our social media for all of the latest Billionaires news. Closer to home, shareholders of Emaar Properties have approved the acquisition of Dubai Creek Harbor project from Dubai Holding in a deal worth $2 billion. The total purchase value will be 50% in cash and 50% in Emaar shares payments. With half of the payment to be made in stocks, Dubai Holdings would become Emaar's second largest shareholder with over 659 million shares, or 8% of Emaar's total issued shares. Investment Corporation of Dubai is Emaar's largest shareholder with a 24% stake in the company. Saudi's non-oil exports grew more than 26% year-on-year in July to hit $7.1 billion. Official data shows total July exports increased by 59% year-on-year to $37.4 billion. This was due to higher oil exports, which rose by 69%. Non-oil exports, mainly comprised chemical and allied industries, accounted for 36% of the total. Meanwhile, total imports increased by 18% in July to $14.64 billion compared to the same period last year, giving the country a positive trade balance of $22.85 billion. And staying in Saudi, gamers from 8 countries have battled it out at the PUBG mobile tournament in Riyadh. It's part of Gamers 8, a summer festival spotlighting the kingdom's emergence as a global esports dynamo, one that officials hope can compete with powerhouses like China and South Korea. Much like with F1 and professional golf, the kingdom is asserting itself on the esports stage, hosting conferences and snapping up established tournament organizers. Saudi has an esports strategy that calls for the creation of 39,000 esports-related jobs by 2030, while producing more than 30 games in domestic studios. I'm Ramia Faraj. This is The Daily Brief. Thanks for watching. Bye for now.